Welcome back. I'm Miranda Kahn. Here's a look how the markets fared today. A down day overall. Oil, however, up slightly, but it remains way down compared to this time last year. Also in today's money news, Walmart cut its annual earnings outlook today. The company says higher costs led to fewer net profits. Attributing to those costs is greater investment in its employees, higher wages, longer hours, and employee training. New home construction is at its fastest pace since the recession of 2007 began. That's according to the Commerce Department. Construction of single-family homes increased nearly 13%. Steady jobs and low mortgage rates have fueled the recent production boom. Greece approves its first privatization deal as part of its bailout. A Germany company will now control operations of 14 of the country's airports in exchange for more than €1 billion. The deal should pave the way for a final agreement in the upcoming weeks. NBC makes a $200 million equity investment in BuzzFeed. It represents a sizable stake in the internet media company. With consumers shifting to on-demand viewing, TV networks like NBC want to broaden their digital media plans.
All right, Miranda, thanks. Let's welcome in Tom Hutchinson right now, Senior Financial Editor of the High Income Factor. Tom, great to see you.
Great to be with you, John.
All right, let's talk about the Fed. Steve Forbes guest-hosted CNBC Squawk Box yesterday. He had this to say about the Fed.
The dollar is strong, and this is one of the things you get upset about the Fed. They didn't mean that to happen, which means they really don't know what they're doing.
Well, Forbes also said the Fed will raise rates in September. Is he right? Will they finally do it? And is he right about the Fed not knowing what they're doing?
Well, first, let's talk about the not knowing what they're doing part. I think that's right, because no one can possibly know what they're doing and all the repercussions of involving themselves in the economy to the extent they have. I mean, to look at all the ramifications, not only here but abroad, it's like a game of 17-level chess. There's no way to tell the effect. One of the non-intention consequences is that the other countries have copied us in this central bank stimulus and weakened their currencies, and you've got a rising dollar. They didn't anticipate that. And it's making it a more difficult decision for them to raise rates. However, while it's hard to say what they'll do because they've never raised rates before. I don't really know a pattern here. I think they should raise in September, but I still think there's a fair chance they slough it off and do the wussier December hike.
Obviously, when you look, if you follow the financial markets, you've seen over the last few years how reactionary investors have been to any little news about the Fed. If they announce they're going to continue with the quantitative easing, the market goes up, and it's been going up and up and up and up and up and up and up. And we'll talk about the bull market in a second. But would you expect even the slightest hint of some sort of definitive rate increase would mean a pretty big correction for the stock market?
Well, I don't think so, because I think the markets have largely priced in a rate hike before the end of the year. I think there could actually be some relief when they actually do raise them. So I think what's hurting it more now is the uncertainty, this guessing game. Are they going to raise them? Are they not? I mean, they said they would. It's time to go ahead and raise them.
Yeah, now let's talk about the bull market a little bit. 6 years old, this bull market, the third longest in U.S. history, though the good times may be ending, despite what you just said. Gretchen Morgenson, assistant business and financial editor of the New York Times, writes this: doubts may be creeping into the notion that companies with no earnings should trade at sky-high values, or valuations, as they say. An aging bull market often coincides with investors starting to question these kinds of assumptions. Is she right, Tom?
Well, she may well be, and I think this is the most tentative part of the bull market we have seen yet. Because the problem is, I think stock prices have sort of built in a strong second half for economic growth. And because of the problems in China that we've seen and the once again sputtering global economy, I don't think the second half is going to be as strong as once thought. So there's not a lot that can propel stocks higher from here. The only thing holding the market up is there's still no place else for money to go.
Right.
It'll take a higher degree of fear to scare people into zero or near zero returns. We don't have that yet, but I don't see around the corner how the market goes much higher from here. I think for at this point, in the near future, there's more downside than upside.
All right, perhaps maybe a plateau is the new normal, not a precipitous downturn in the market. Tom Hutchinson, thanks so much for being with us. To learn more about the high income factor, simply go to moneynews.com/HIF. Coming up on Newsmax TV, Steve Malzberg talks with presidential hopeful Mike Huckabee about the Iranian nuclear deal, and the Hardline's Ed Berliner talks education and Common Core with former CNN correspondent, also formerly of NBC, Campbell Brown. Definitely want to check that one out.
Hey, listen to this. In a recent interview, Chris Christie said he will top Donald Trump's Iowa State Fair helicopter entrance by riding in on a pony.
Oh, they just couldn't resist. The rest of that joke and much more when we return from this commercial break with your headlines and punchlines.